Hi everybody, good afternoon. How are you doing? Autumn is certainly here now. Good afternoon. Welcome to the next of our Essential series. I'm Lottie, founder of the Jura Society. We bring women, wealth holders and their advisors together through education, connection and collaboration across our three pillars of women, wealth and well-being. This afternoon, I'm really excited to be joined by Kate and Marnie of Argenta Private Capital, and they're going to be demystifying a fascinating and often misunderstood asset class, Lloyd's of London. As always, if you do have any questions, feel free to pop them in the chat, or if you're watching this on the replay, feel free to reach out to myself, Marnie, or Kate directly, and they'll be happy to answer any questions you might have. But yeah, really excited about this one. We've got lots to cover, so let me bring the ladies in. Hi, Marnie. Hi, Kate. How are you?
Hi, Lottie.
Hi, Lottie.
Hello.
Thanks for having us.
Welcome. So before we kick off, could you just give us a little bit about yourselves, what you do, and who your typical clients are, perhaps?
Yeah, thanks, Lottie. It's really nice to be here, and thank you to everyone who's joined us. So my name's Kate Towng. I'm a director at Argenta Private Capital. I've been with the business about 6 years, and I'm an accountant and tax advisor by background. But more recently, I'm now responsible for business development into the Lloyd's market, and we'll just talk you through what that means in a minute. But I'll hand over to my colleague, Marnie.
Perfect. Thanks, Kate. So my name is Marnie Hunter. I'm a marketing associate at Argenta Private Capital, so sit in Kate's team on the business development side. And prior to that, I was working in banking, so did a bit of history in relationship management before moving in strategic comms. And yeah, I've been with Argenta for about 1 year now, so it's really exciting.
Great.
And it's lovely to have you, Marnie. Sorry, Lottie.
No, I was going to say she brings a great energy to Lloyd's as well, which is really, really cool and probably needed. But to start things off, could you introduce us to Argenta Private Capital and the industry in which you operate?
Yeah, thank you, Lottie. So we are a capital or specialist advisor to the Lloyd's market. So Lloyd's is an insurance marketplace made up of multiple different players. It's not the bank. We have around 500 clients. They're a mix of private individuals and institutions, and we help them invest into the Lloyd's of London insurance space. So as I said, it's not the bank, it's a global insurance marketplace, and it's been around for centuries. It's where all sorts of risks are insured, from ships, natural disasters, to concerts, cyber threats, and even sporting events. It's one of the most, the last remaining face-to-face markets. We're based at 1 Lime Street, right near Leadenhall Market. It's a fantastic building. We enjoy taking people around it and really seeing how it operates on the underwriting floor. The way it works is actually pretty unique. So risk is syndicated across the market. In order for the syndicates to take on that risk, they need capital. And that's where our clients come in. So our clients provide the capital. And in return for that capital, if the syndicate performs well, they earn a return. And similarly, if there are losses, they will share in those losses too. So it's a real investment with real risk and real reward. Think of it like the stock exchange, but for insurance. And at Argenta, we're one of the few firms who can advise clients on how to participate in this really exciting market. We've got a brilliant team made up of research analysts, client directors, operational specialists, all working together to help clients spread their risk and generate returns in a smart and informed way.
Amazing. So you've mentioned you've got some really, really key players in the market there, the investors. What are the kinds of investor profiles that you typically look after?
So we typically work with clients who have access to about 10 million or more in investable assets. And the typical starting point for a Lloyd's investment is around £500,000 into capital committed. And that's purely just to make the costs viable. Obviously, you can go up from there quite significantly. But, you know, you ask about investor profile, and within that, there is a real mix. I think we've got, you know, entrepreneurs, we've got family offices, finance professionals, and then we've also got a significant amount on the corporate side. So a few institutionals, reinsurers, a wide range. So in general, I think, you know, as Kate explained, it is a niche market, but it attracts people who are looking for generally something a little bit different and something that complements their existing portfolio.
Well, definitely. And I think that there's a lot of movement going on in the world, and people are looking for different opportunities and, as you say, something a bit different to invest in. How would a Lloyd's typically fit into the rest of a client's portfolio?
Great question. So Lloyd's itself is classed as an alternative asset, and it is a fantastic diversifier within that broader investment portfolio. And that's because the insurance market doesn't typically move in line with traditional financial markets like stocks and bonds. So when these are volatile, as we've seen, particularly over the last 12 months, Lloyd's can offer a bit of stability within a broader investment portfolio. And then on the other side of things, I think the Lloyd's market itself, there's already a lot of diversification built in. And what I mean by that is that most syndicates will cover a wide range of risks. So clients aren't putting all of their eggs in one basket. So there are some syndicates within the Lloyd's market that will lean a little bit further towards cyber or a little bit further towards catastrophe. But generally, there is a pretty strong spread. And I think if all the risks were going wrong all at once, we'd probably have globally bigger problems at play.
Yes.
I think it's also interesting how clients can use that wider portfolio to invest in Lloyd's. So the way that the capital is provided to allow those syndicates to underwrite and then share in the risk is very flexible. So clients use an existing stocks and shares portfolio that they pledge as backstop capital. And it can even be a pledge of illiquid assets if you get a bank guarantee against a second property or a portfolio of properties. And so you can use a wider portfolio to also support your underwriting returns. And then those clients are benefiting from the returns they're already generating on that stocks and shares portfolio or the property rental income, essentially getting double use for those assets. So it is a really clever way to make capital work harder.
Yeah, and actually with that as well, you've got the sort of the inbuilt tax benefits of that you're not realizing any gains, but actually you could then, benefit from that later on, which is...
Yeah, exactly. Yeah, so you don't have to transfer the assets into the name of the Lloyd's investment vehicle. You can keep them in your own name. So there's no disposal. You just keep using your existing investment manager and invest them and generate a return on insurance.
Boom. Why not? Why not? Like this. Double use of assets, everybody. Yeah, keep note of that. Very useful. Perfect. So yeah, it really sounds like a no-brainer when you put it like that. But how much is your time spent actually explaining the opportunity? And is there anything else that is keeping you particularly busy at the moment?
So quite a lot of our time goes into education and explaining what the investment opportunity actually is. I think anyone that has spent some time speaking with us about Lloyd's, or anyone that has kind of Lloyd's on their radar, they'll understand that there's a lot of jargon and complex language that gets thrown around. So a lot of our time is spent translating that into something that's actionable and clear for our clients. To do that, we produce plenty of materials. We host events, webinars, participate, collaborate with people like Lottie, and also having those one-on-one conversations to help people understand what they're actually getting themselves into. And then, I
think now's a particularly busy time for most areas of our business, because all new investors need to be onboarded around about now in order to start underwriting and benefiting from those underwriting returns from the 1st of January. So I think the word has got out that the Lloyd's returns have been exceptional over the last few years, and we have seen a considerable amount of interest from new investors coming into the market this year. So it's been quite a busy season getting people over the line and ready to start underwriting. And we're also planning that portfolio selection for the 2026 year. So discussions with syndicates, understanding business plans, and also advising our clients what that portfolio might look like for them in the next year. So that's been keeping us busy. And then on the other side, with all of the inheritance tax changes, a lot of our clients are thinking about what that means for them, and how does their Lloyd's underwriting fit into their previous IHT planning. So Lloyd's is a tax efficient investment if managed properly. So yeah, there's been a lot of work on that side as well.
Interesting. No, so I was just thinking when you're talking about the portfolio, so if I put it into sort of the world that I know, like in sort of standard investment portfolio terms, do you then go and select syndicates who then select the underlying risks, let's say? So they'll be like, okay, we really fancy cyber this time. So they'll put together their menu, let's say, within the syndicate. And then do you choose the syndicate and then have multiple syndicates? So say the syndicates are funds,
Yeah,
and they pick the
exactly.
stocks, which are the risks. Do
Yeah.
you then have multiple funds within
Yes.
a portfolio for the client? Let's say, let's
Yeah,
translate
exactly.
that
So
away from
I think like the majority of clients will have 6 to 8 or more syndicates in their portfolio in any given year. It can be considerably more, but that will provide them with a really nice spread and diversified underwriting portfolio. The syndicates themselves, as Marnie mentioned, are very well spread as well. So they will have a variety of different classes, but the investor is taking the whole syndicate as a whole rather than picking specific classes. And obviously they won't just go, oh, this year I fancy a bit of cyber and this year, but they will have experts in their field that they've been underwriting for a long period of time and will be pulling together business plans to show why they believe they can charge certain rates in certain areas and why they're growing and why they're reducing and how they're reacting to the rates that are charged for insurance. So it's our job to understand those business plans and then guide clients around the risk associated with them to determine their appropriate portfolio. But the other good thing is that portfolio can change every year. So you can grow, you can reduce, you can completely swap it if you have a complete change of heart or different risk appetite. So that's quite a fun aspect of the sort of fund picking, which is going on at the moment.
Okay, cool. No, well, that helps to sort of clarify. I think for people who are not familiar with the terminology, let's say, like it's kind of like how do you kind of visualize it in that way? No, that's really helpful. Thank you, Kate. Were you going to say something, Marnie?
I was just going to say on the, what Kate was saying about the, you change your strategy each year to grow or reduce. This week in particular is actually the first week of auction season. So what we mean by that is when our clients are thinking about what their strategy is for the year ahead, they'll bid or sell their share in a syndicate at an auction, and there's 3 rounds, and that's the first week this week. So when Kate said our team is very busy at the moment, that's no understatement. We're very busy liaising with clients and getting ready for the auction season, which commences tomorrow, I believe.
Trying to estimate what sort of prices are going to be charged for access to different syndicates.
That's interesting. Okay, but then just going back, sorry, I'm just like really actually interested in this. So you mentioned it being face to face. Are they then doing these auctions face to face? Is that how that works? Right at the beginning, you're like, this is a face to face marketplace.
Yeah, so we would meet the underwriters on a face to face basis, and we do a lot of presentations and meetings where we'll invite specific underwriters that our clients are particularly interested to explain their business plans and their market. The auctions are carried out online. So I think since the old days of the 70s and 80s, when it used to literally be, who do you know? How do you get the best price? How can I take this underwriter out for lunch? Now it's all a very formulaic approach via an online auction system.
Cool. Thank you for explaining that. Thank you for answering. Okay, let's go back to IHT. That is a big consideration for a lot of people happening at the moment as we pull up to the budget. Who knows what that's going to look like? But IHT planning, who knows? No crystal balls here. Can you explain how Lloyd's investments support estate and succession planning? Because there is a little bit of a silver lining there.
Yeah, of course. So Lloyd's is unique in that because of the way the market's structured, the capital providers or investors are deemed to be underwriting themselves. So they are underwriting at Lloyd's, which is a trade for both for tax purposes. So for IHT purposes, it qualifies subject to certain conditions that are, your usual hold for 2 years, don't overfund, can qualify for business relief. Obviously, that is slightly less beneficial than it used to be following the budget. So from April 2026, you only get 100% relief up to the first million and then 50% relief thereafter. But it's still a really effective way to pass wealth down to the next generation, and 20% IHT is obviously better than 40%. But bearing that in mind, a lot of our clients are considering how best to pass that on to the next generation and when that should happen, bearing in mind CGT rates. But as you say, who knows what might happen in the budget.
Yeah, fun times. But let's get a bit more positive. You've mentioned some new entrants to the market. Are you seeing a shift in who's actually investing in this space?
Yeah, no, we certainly are. And I think for us, it's quite an exciting shift to see. So we are seeing a younger generation of investors showing interest in the market, particularly those who've perhaps sold a business or come from finance or insurance backgrounds. And once they wrap their head around and understand Lloyd's as an alternative asset class, the response is usually really positive. Kate talked a little earlier about returns in recent years. They've been very strong. The last 3 years have been in excess of 25% returns on capital. So that's certainly helped raise awareness. And particularly on the corporate side as well, we've seen corporate investors showing really strong interest in the market, namely hedge funds, which is a bit of a shift, I guess, in terms of how capital is provided at Lloyd's. And then equally, we've talked a little bit or a lot about IHT. And I think that's, for us, means we're quite focused on engaging the next generation and how to bring them into the business and how to make them understand Lloyd's as an investment. We know that the market has been around for over 300 years and Argenta for over 60 as well. So we've got a pretty strong pipeline and history of investors. So we need to be thinking about how we can make the market accessible and relevant for today's investors while also preserving that historic pillar and those clients that we've looked after for years and years.
Yeah, I think it's really about simplifying it, as you say, and just making it more accessible. And we have made progress in those areas through different opportunities and how to come into the market. And as has Lloyd's in terms of making it simpler. So it's just trying to make it more accessible.
Yeah, definitely. And that's it. And it's awareness, because, if somebody, and that's all what we do here really at Jura is the unknown unknowns. It's like, why would you be, as, a group of women, let's just, do that because that's our main focus. We would never be talking about this, but actually, why not bring this to the conversation? Why not talk about this over dinner? Anyone who's watching this, they can then go to their girlfriends and go, have you heard of Lloyd? Something like that just sparks off a chain reaction of, inquisitiveness. And I think that is, an amazing way of doing it, rather than, just hearing about it from, say, your husband or your father, where they're like, this is a thing, and then they sort of alienate you from it. Is actually,
yeah, definitely.
Why not have this conversation? And on that note, are there any other broader shifts across the sector that are worth pointing out?
Yeah, I think on that perspective, in terms of women, we are seeing a lot more, even in Argenta, a lot more women in leadership and in analytical roles across the business, but also in the Lloyd's market. I think traditionally we've been a bit behind the other financial services sectors, but it's really positive that we're catching up and bringing in those fresh perspectives. Is obviously really important. And I think, hearing webinars like this and just getting the word out in simple terminology, because we use a lot of jargon at Lloyd's, and I think historically it was a little bit like a club. And if you're not living and breathing it, sometimes it is difficult to explain, so it does exclude certain people. But yeah, and then we've got our new leadership at Lloyd's as well, which is there's a real sense of momentum and positivity with Patrick Tinnan taking over as CEO, so he's really well respected in the market. And so yeah, so it's an exciting time.
If I can just add to that as well, perhaps with a bit of a buzzword approach, but as with all sectors, we're seeing strides in technology and AI, and I think that's not isolated. It's certainly playing a role in the insurance sector as well, particularly in how risks are assessed and how operations are managed. So I think it's a positive for both insurers in terms of assessing and managing claims, but also investors and getting that accuracy and confidence in the sector. So yeah, certainly a few shifts at play.
Yeah, well, it's exciting. You guys are at the heart of it, so cool. Love this.
Yeah, we do have a diagram with us firmly at the middle of the section.
You're like, wow, in the eye of the storm, one might say. What advice would you give to someone who's considering their first Lloyd's investment then?
Yeah, I think, get informed, come and speak to us. There's no silly questions. You know, it is technical. We try and break it down. But, you know, take the plunge and start to come and hear it. I mean, as you said, once you hear about all the benefits, it is a really compelling investment. So we can help you guide you through the onboarding process, how to get into the market, and then tailor that investment to your specific goals. It's not a one size fits all. It is a bespoke investment opportunity, but it can be a really rewarding journey. Come and do a tour of Lloyd's. Come and meet those underwriters. So you know, we're happy to take you around there as well.
Well, yeah, we'll definitely we'll do something like that once you guys have quietened down a bit from all of your onboarding for all of your new clients. We will definitely organise something, because again, it's contextualizing it, and I think that can be one of the most daunting elements of finance or wealth in general, is actually providing context. Like, what does this actually mean? It is an unknown. So having some brilliant women like yourself to actually lead the charge is so refreshing and encouraging. So thank you both so much for sharing that really, really cool overview. Are there any final points that you would like to share at all before we close?
No, I think that'd be lovely. I mean, I think you know, you and your members would be delighted to do a tour of Lloyd's and maybe arrange some drinks afterwards. But yeah, thank you for listening. Any questions, please shout.
Thank you all for tuning in, and yeah, we look forward to seeing you at Lloyd's very soon. Thank you, Marnie. Thank you, Kate, and we'll see you very shortly. Thank you.
Thank you, Lottie.
Thank you, Lottie.
See you. Bye-bye.